All right, let's get right into it. Today, we're looking at two absolute titans in the world of real estate, Dubai and India. Now, they're both huge, they're both growing like crazy, but as you're about to see, they are playing completely different games. You've got one that's all about explosive speed, and the other, it's all about incredible long-term endurance.
$117 billion. Just let that number hang in the air for a second. Seriously, what on earth could possibly be worth that much?
And there it is. That is the jaw-dropping value of property deals just in Dubai, and just in the first 6 months of this year. We are talking about a figure that's bigger than the entire economy of some countries, all changing hands in half a year. That is the kind of mind-blowing speed we're dealing with.
And this really brings us to the heart of our story today. This isn't just about numbers, it's about two totally different strategies. So I want you to think of it like this. The sprinter, that's Dubai, versus the marathon runner, that's India. Let's break down what that actually means if you're an investor.
So first up, let's talk about our sprinter. We're looking at Dubai, a market that is, from the ground up, built for speed, for high performance, and for really rapid returns. So what makes this engine run so darn fast? Well, here's Dubai's biggest advantage in a nutshell. Rental yields. We're talking 6 to 9%. Now just compare that to India's 2 to 4%. What this really means is pretty simple. For every single dollar you put in, your money is working way harder and way faster for you over in Dubai.
And it's not just the yield either. There are two other massive factors in play here. First off, it's a tax-free environment. I mean, who doesn't love that? You get to keep more of those high returns. And second, that 1-2 punch has turned the city into a legitimate global magnet for investors, pulling in money from all corners of the globe, which just keeps that market buzzing.
But, and this is a really big but, sprinting at that kind of pace comes with risks. The market is getting absolutely flooded with thousands and thousands of new homes, and that's leading to a major concern, a potential price correction on the horizon. That incredible boom could easily lead to some serious volatility. It's the classic sprinter's risk. You might just burn out.
Okay, so now let's completely switch gears and talk about our marathon runner, India. This market, you see, it isn't playing the 100-meter dash. This is a story about immense scale, steady progress, and true long-term endurance.
Just look at the sheer scale we're talking about. India's real estate market is already worth an enormous $400 billion. But the number that's truly mind-boggling is the forecast. It's projected to hit $1 trillion by 2030. Now that is the marathon runner's game. You're betting on massive, long-term growth.
But, of course, it's not a perfectly smooth run. There's a really important nuance inside the Indian market. While the luxury home segment is absolutely booming, the huge, affordable housing sector is actually slowing down a bit. It's just a little reminder that even a marathon runner hits some tough patches along the way.
All right, so we've met our two competitors. Now it's time to do what we've all been waiting for. Put them side by side and look at the head-to-head numbers. How do the sprinter and the marathon runner really stack up when you put them on the line? And boom, the return on investment story is right here in black and white. On average, Dubai is giving you a 7.5% rental yield. That is more than double India's 3%. That huge difference is really the core of the sprinter's appeal. It's just undeniable.
This scorecard really just brings it all together, doesn't it? Let's walk through it. Okay, when it comes to pace, you've got Dubai's fast, high-return model versus India's slower, steadier game. For rental yield, it's a blowout. Dubai's 6 to 9% against India's 2 to 4%. Now, their key strengths are totally different. Dubai is all about its global investor magnetism, while India's power is in its massive scale and future growth potential. And finally, you have their primary risks. In Dubai, it's that threat of a price correction, while in India, it's the challenge of those slower internal segments. So what does this all mean for someone looking to invest? It really comes down to what kind of race you want to run. Are you looking for those quick, explosive returns, or are you in it for the long haul, for that steady, compounding growth? It's all about choosing your own investment finish line. Ultimately, what we're looking at are two very different paths. Path 1, that's Dubai, the sprinter's choice. You go there for the fast, high return potential in a great tax-free environment. Then you have Path 2, India, the marathon runner's bet. You choose this one for the slower, steadier growth, banking on that incredible, enormous future scale. And that brings us to the final question, and this one's for you. Now that you've seen the scorecard for the sprinter and the marathon runner, if you had to pick a race to run, which would it be? Would you go for Dubai's immediate, high-octane returns, or would you put your money on India's massive long-term growth story?
It's a pretty fascinating choice to think about.